Now, Ubisoft stock is basically down since IPO. If you would have invested in the stock in the around 2000s, you wouldn't really have made any money. Since then, the business has developed, grown. Normally, that is the time where I normally say, hey, usually the stock is a good idea to buy then. But not with Ubisoft. Ubisoft is a terrible company in my opinion with terrible products. Now there has been a huge jump after reports that Tencent and the founding family of Ubisoft might take the company over. And I think this buyout would be the best thing for investors. It would be the best thing for the company long term. A first look at it, yes, revenue has grown. It grows on decent growth rates. But since 2020, the growth rate has been a bit smaller. And of course, this is a gaming company, so revenue is gonna fluctuate very much from quarter to quarter. Because if a game gets released, or if a game got released this quarter last year, that means the year-by-year growth rate is going to be very skewed. Of course, they have a few high-quality assets. They have Rainbow Six Siege. They have For Honor. They have the Anno series, something I very much like playing. They have Assassin's Creed. But now comes the issue. IP is only as great as you use it. And currently, all their greatest games are flopping. We can see, for example, Star Wars Outlaws, that should bring in more money. Well, it kind of flopped. Reports are they only sold 1 million copies in the first month. That's $70 million. That's nothing. A good game for them is 1.4 million in 1 week. They say we will give you high quality games. But that's just not the case. Every Ubisoft game has flopped. Ask every person about their opinion about Ubisoft. They used to make great games, but now they're all just run down money grabs. And now what is the problem when your product sucks? People don't want to buy it. What do? You blame the consumer. He said, in today's challenging market, delivering solid quality is no longer enough. This man is basically saying you gamers have way too high expectations. You want better stuff. Bringing out a polished game is not enough for you. Well, first of all, none of these games are really polished. Blaming the consumer for not wanting to buy your product is... It just shows that this company should go bankrupt. I love a lot of IP. I love Assassin's Creed, the old ones. I still love Anno, the series, but then you might think, oh, but they still make a net income every year. I mean, 157 million in the last 12 months. That should be worth something. Like, that company is still worth something. That's around a 10 times PE ratio. And maybe if you respin all that IP, make it good quality, well, maybe then it's all okay. No, they don't make profit. Now, last year they had a big write-off. Let's just take the 2023 to 2024 earnings. I'm taking this because they, for the latest quarter, don't have such a great display. So I'm just gonna ignore last quarter for now. Cost of internal development and license development. That is basically what it costs them to make the games. They don't have capex, they have this. It's basically intangible assets. 887 million. Cash from operations, 90 million. Now, of course, if you adjust for all the other stuff, like working capital, they had a hugely negative operating activities cash flow. But now just say cash flows from operations. Payment for the acquisition of intangible assets, 160 million. So even if you ignore the working capital changes, which, sure, over the long term that shouldn't matter too much, that is still a negative free cash flow, where they made 150 million in earnings. And that has always been the case. Sale and purchase of intangibles has been very high, so in exchange for free cash flow has always been negative. And now to what does that lead? Huge amounts of debt. Over the last few years, it has really exploded. It's now at $1.3 billion net. Basically, before this bump, the company was basically half debt, half market cap worth. And now then you think, free cash flow negative for a long time. Gamers hate their products. They don't sell enough anymore. Hugely unprofitable. And for every year that you don't turn this around, this number is gonna go downwards because more of a company will be held by the debt holders. And then it makes sense why Tencent is gonna do this buyout, or rather probably wants to do this buyout. Because you have some great IP sitting there, and if you just redo the company, you could turn ship around. But the current leadership is just so incompetent. They rush the games out, don't care about the reputation hit. I see some signs of turnaround. The new Assassin's Creed was delayed because the developer said, hey, we need more time. This is not polished. Finally, we're letting them do that. Plus, they are finally giving up on the Uplay section. If you don't know, in the gaming section, basically every publisher has their own store. They have their own launcher. And then there's Steam. Everyone has Steam. Steam is the greatest product, in my opinion. It works. It has no issues. Support is great. It is just a genuinely great experience. And basically, over the last few years, they said, no, we're not gonna sell on Steam, we're gonna sell on our own platform, save the cut we would have to give to Steam. But the issue is, their platform sucks. It crashes, it doesn't work. So now they're saying, hey, you know what, we're just gonna go to Steam. You can have the game day one on Steam. Before, maybe like after 1 or 2 years, it was slowly brought to Steam. But now, okay, it's on Steam. And that is great. So I see signs of a turnaround, but the question is it enough? Has the company enough a lean way to do that? Because sure, they have $1.2 billion in cash, the current liabilities are not over the current assets, so they are not in risk of an immediate bankruptcy. But if this continues, they will burn money for longer. If they delay games to polish them up now for a few years, that will probably eat in their free cash flow. Well, it will make the negative free cash flow even more negative. So the question is, can they afford that? They would either have to issue shares at very low points and dilute you, or somehow find more debt, which will probably be at very high cost. So in that case, this Tencent buyout just makes sense. Tencent can give them the resources they need to improve their business in the long term. I would only buy the stock if I really believe in this buyout, that the buyout price is going to be way higher than this 14.20. If you buy it now, you're at risk of huge dilution, you're at risk that the company doesn't actually turn around, that they just say it quickly to appease gamers, and then when they turn around, oh, never mind, we do the same shit as before. But the debt is gonna grow, that the company is slowly creeping towards bankruptcy, and then it's gonna be sold by the debtors and not by you. So that is my take. It is a risky play. It has a high reward if the buyout price is fairly high. The market cap is only 1.8 billion right now. So this is peanuts for Tencent to take over. Question is, would it go through regulatory? But that is something you have to look in for yourself. I'm not buying it. I don't like to touch these type of situations. What about you? Write down below. Have a good day.